Okay, Chapter 5 will be talking about accounting for general capital assets and capital projects. First, as an overview of what we'll cover, we'll go over general capital assets and then the typical financing sources for these general capital assets, the capital projects fund and when this is used and when it's not used, accounting for capital projects at the fund level, and accounting for capital projects at the government-wide level. Next, we'll talk about what general capital assets are. These are long-lived assets that are used by activities reported in governmental funds. Examples are land, building improvements other than the building, machinery equipment, construction work in progress, infrastructure like roads, bridges, and then intangibles, which are patents, easements, or water rights. These need to be distinguished from capital assets that are associated with the other types of funds other than governmental, like proprietary and fiduciary funds. So that's where the assets that are specifically tied to those funds will be reported in those funds. The typical financing sources for general capital assets are tax-supported bonds, which are usually repaid from taxes levied on the citizenry or from the group or citizens that receive the benefit from the capital asset specifically. Grants from other governmental units, in other words, federal or state grants, transfers from other funds, gifts from individuals or organizations, and special assessment taxes or bonds. If money received from citizens, from transfers from other governments, from taxes, or from grants from federal state are to be used specifically for large purchases of large capital assets, it's recommended that a capital project fund be used to account for these. Okay, the purpose of capital projects fund is to account for resources that are restricted to the purchase of construction of specified capital assets. The examples of these large specified capital assets that really aren't, you can't fund them from just general appropriations in the special revenue fund or the general fund because of how large they are. This could include roads, a new bridge, a dorm, a new fire station, a new city hall, things like that. These are large capital assets, again, that can't be funded through the general appropriations process because of their size. However, things like vehicles or smaller capital purchases that might be recorded as a capital asset on the for-profit side or the accrual side and depreciated over multiple years. For the general fund, for the governmental funds, these are just recorded as expenditures in the year that they're incurred. These capital projects funds exist only for the life of the project that's under construction, and a separate capital projects fund is set up for each project. So you don't just have a permanent capital projects fund that just goes on forever and you lump in a new parking deck with a new city hall and there's just kind of a constant balance. There would be a city hall capital projects fund and a separate parking deck capital projects fund. Accounting for capital projects at the fund level. Again, one of these as a governmental fund, these have a current financial resources measurement focus. There's no long-term assets or liabilities for these funds. Therefore, they use that modified basis of accounting, which is that resource or revenues are reported when they're measurable and available. Expenditures are recorded as the liability is incurred. Formal budgets aren't integrated into the accounting for capital projects fund like they are the general fund and other funds. Instead, the bond indentures or the gift agreements or the transfer agreements that created the financing for the capital project are used as the control mechanism on spending. If a bond was on the most the most obvious control is that the bond is issued for $3 million. That is the control on spending. A budget's not necessary because the project is only funded up to $3 million. So the capital project must be paid for using just those $3 million. But it is still recommended that these funds use encumbrances in order to have control over contracts and to prevent overspending. Have control over contracts and the purchase orders and make sure those are recorded, and to properly reserve spending for various periods. Required financial reporting for capital projects funds: a balance sheet and statement of revenues, expenditures, and changes in fund balance, with the balance sheet taking only a current focus. That is, it's only going to have current assets, cash, and investments, as well as only current liabilities. This statement of revenues, expenditures, change of fund balance, generally you're only going to see revenues for capital projects fund down in the other financing sources area, because most of these are funded by debt, and with the occasional one that's funded by tax revenues, then it would have taxes up in the revenues section. In the governmental fund financial statements, it is going to be listed as a major fund if it represents more than 10% of all governmental funds, and 5% of the government as a whole. So if it meets those two criteria, it will be listed as a major fund. If it doesn't meet those two criteria, then it will be listed as a non-major fund and grouped together with all of the other non-major funds in that column that you've seen before over on the far right. Capital projects, of course, would also be recorded and recognized at the government-wide level. And of course, government-wide financial statements have an economic resources measurement focus, and thus use an accrual basis of accounting. The capital projects fund appear in the governmental activities column of the government-wide financial statements. And the required financial statements, if you'll remember, are the statement of net assets and the statement of activities. On the statement of net assets, again, because it has an economic resources measurement focus and not a current resources measurement focus, the capital assets, these are presented on the balance sheet or the statement of net assets, and they're capitalized and recorded net of accumulated depreciation. So you're recording depreciation and accumulated just like you do on the for-profit side. In the statement of activities, of course, that means that depreciation expense is going to appear, not the other financing sources and other financing uses. Those, the receipt of bond proceeds is not going to be another financing source on the government-wide side. It's going to be recorded as you would in regular for-profit accounting on the balance sheet as a long-term liability. And of course, again, depreciation expense will be recorded in the statement of activities.